Well, I hate to sound like a broken record, but we did it again. Another massive week of trading in the markets. However, with that being said, any experienced trader knows that we are only as good as our next trade. So, as always, I'd like to invite you to check out another Forex market preview where I share with you what trades are on my radar for the week ahead, as well as a little lesson about what it really takes to be a successful trader. Hey guys, Akil here and welcome back to another Forex market preview. Thank you once again for lending me a few minutes of your weekend to check out this video. If you guys are new, I want you to do me two things. One, hit that subscribe button underneath this video on YouTube. And two, head over to our website, tradeempower.com/forex-market-preview. Sign up for our mailing list. That way you get this video mailed to you each and every week when it comes out, along with any notifications on free trainings or discounted courses and anything else that we may mail out. I promise that we don't spam you. We only send stuff out when it needs to be sent out. We've got a lot on deck for today, so let's hop right into things and look at a trading opportunity on my radar for the euro dollar. All right, let us head over to the euro dollar here. We're going to start on the daily chart, get a little bit of a higher time frame perspective here with the euro. Let's just kind of get this junk off my chart. There we go. And recently you can see that the euro, right, has been in a bullish trend, right? Our most recent move starting down here has been moving from the bottom left of our screen to the top right of our screen. You can see breaking structure to the left. And as we've gone higher, we've actually started to put in a little bit of consolidation. So I'll go ahead and draw that out. We'll just start right here. You can see swing low to swing high. The market retraces a little bit. We then put in a new structure high right here, a higher high, higher close above our previous structure high. We then put in another retracement. Now we make a move to test this level of resistance. A break above, close above will give us a higher high, higher close. However, resistance holds right here and we start working our way all the way back down to retest our previous structure lows. So again, we have a retest of previous structure highs. We have a retest of previous structure lows right here. We like to call this consolidation. We like to call this sideways movement. Now, the cool thing about sideways movement is that as the market begins to ebb and flow, whereas it may look like junk to many traders, and I think we had an example of this last week, there are often advanced pattern formations that end up getting formed. And we can see actually two of them. Oops, sorry about that, I'm blowing up. We can see actually two of them formed right here. The first was a bat formation, X to A to B, B to C, and we had a CD completion right up here. The second, which is going to be on my radar for the week ahead, is going to be a cipher formation. And we're looking at our high point being right here. So our swing high, the retest of our previous structure high, we're going to consider that to be our X leg. Now, this is going to be considered an anchor leg. Transformation members, I know we did a training last week on the difference between anchor legs and impulse leg. This is a perfect example of an anchor leg because it comes within that consolidation. There is no new structure on this time frame created. And then we're going to have our X to A like this, our swing low, or excuse me, our swing high to swing low, X to A. We're going to have an A to B. We're going to have a B to C. We're going to have a CD completion right up here, I believe. Let me just get my Fibonacci retracement tool on and measure that out correctly. We're looking for a move to our 786. So a little bit higher right up here. If I can get you. Oh well, I couldn't move it. But it's right up here at about 120.35. 120.35 is going to give us a bearish cipher completion. Let me just do it like this so you guys can see it. Boom, looking at an entry right here. So that's a chance to get involved in the euro dollar. This is something that we had on our radar on Friday. We had about 3 or 4 cipher formations on our radar this past Friday. Only one got filled. But the week ahead, we're going to put this on our radar as well. Now, this can also be a head and shoulders formation for you guys that may be structure traders or you're not worried about advanced patterns so much, right? We may have something like this forming as well. Left shoulder, this consolidation period right down here is going to be your head. Could be setting up a right shoulder followed by a move higher. Although I am inclined to be more bullish than bearish here on the euro dollar just based on the technicals. Because we're in this period of consolidation, I wouldn't be too high on this type of move, at least the way that I trade head and shoulders. But that's a story we can talk about later in the week. Now, another good example, while we're talking about consolidation, a good example of consolidation is going to come on the New Zealand dollar, because this is actually going to be a perfect example now that I think about it. We look at the Kiwi this week in the market, and to the naked eye here, if I just zoom this out, right? To the naked eye, this looks like a bunch of junk. The market just comes down, it goes up, it kind of chops around, it comes back down. But we actually had a handful of trading opportunities on this pair this week. We had our first being in a cipher formation right here that did not work out. X to A to B, B to C, C to D. You can see that was busted out. However, we followed that up with an X to A to B, B to C, C to D, bullish bat formation right there. That was a 1 target winner. So we didn't get 2 targets out of that one, but we did get first initial targets out of that trade. After that came a bigger Gartley formation, X to A to B. This was actually one we were tracking for a few weeks. We thought it was dead in the water, but it ended up completing last, I think it was Thursday, I believe, Wednesday or Thursday. And that one was a 2 target winner, which brought us right back up. I should probably make these different colors. Give me a second. We're dealing with a lot of new traders here on the YouTube side. You guys are just seeing one big blob of mess. Let me actually make this a few different colors to kind of separate it for you. But I just want to show you an example again of, we have these areas or these times in the market where it just looks like nothing is happening. And to the trained eye, there are potential moves that are hidden here. And the key emphasis is the trained eye. You have to train your eyes to see these things, because they're not always going to stand out to you. And for the trader that has a trained eyes, they're able to get some pretty good opportunities. While the trader that doesn't, you're probably looking at this now and saying, well, how did I miss all of this? How did I miss all of this? And you have to put in the time of training and working and building that RAS, right? Not just during back testing, but pre-back testing as well. But anyway, we followed it up with a cipher formation, which is actually at market. So we got filled this on Friday, X to A to B, B to C down here, C to D was right up there. We got filled this Friday. It bounced up, or it bounced down, then it bounced up, and it ended up having us right at break even. So assuming there are no gaps in the market, this is actually an at market sell right here on the New Zealand dollar as well. And so we had 2 winners so far. We had a 1 target winner, we had a 2 target winner, we had 1 loser, and we have a potential trade that can win or lose. And you know, one of the myths that we hear out there a lot about trading is that, hey, if you're not winning 90% of the time, if you're not winning 80% of the time, you're never going to be a successful trader. And I think too many newer traders get brainwashed in thinking that's the reality, and it really isn't. Are there traders that win at a very, very, very high win percentage? Yes, but your win percentage doesn't necessarily reflect your profitability. There are many traders that have a very high win percentage that lose money. There are many traders that have a very low win percentage that make money, especially if you're a trend trader. You're probably winning, 30-40% of the time, and you're profitable. So there isn't that direct relationship between I have to win more if I want to make more. It's all about managing risk. And you can see in this example, right, on the 1 loser, we took about a 25 pip loss. So even if you times that by 2, because we're trading multiple positions, we took a 50 pip loss on that trade. On the first winner that only hit target 1, we're looking at about a 40 pip winner on that. On the second trade, right, the bigger one in blue that hit target ones and target twos, we hit 60 pips on target one, another 95 pips on target two. Now, we don't know the outcome of the latest pattern formation in pink, but the worst case scenario is about a 50 pip loss on that. So even if we take a 50 pip loss in that, even if we times it by 2 because we're trading multiple positions, we're still going to be right in profit at the end of this 4 pattern formation, meaning even if we win 2 and lose 2, we're still in profit by a good amount. And that's what you want to see as a trader. You don't want to need to depend on winning all of the time in order to make profit, because that's just going to put the pressure on you. Right? If you have to win 90% of the time, if you have to be that accurate in your trading to make profit, there's a lot of pressure of winning every trade. And that pressure is going to lead to a certain amount of emotional mistakes. You know, me personally, why I don't complain about being a 55% trader on average is because it's very comforting. Losers no longer matter to me, right? Losers no longer make me feel a certain type of way because I know that I can handle X amount of losers and still be very profitable. So instead of taking a loss and it being the end of the world, I just shake it off like, oh, all right, next trade, that was supposed to happen, right? Typically, I'll have 3 wins to every 2 losses, even more than that, something like that. So that's what trading is, right? Trading is it's not win all the time. It's a lot more than that. It really is a battle, guys. Now, I know that I shared with you some pretty big trading opportunities over the past few weeks and months, starting off with dollar Canada to start the summer, going all the way up to the pound dollar that I shared with you a few days ago. But the reality of trading is it's really a grind. It's really a battle. It's really a day-to-day war, if you can put it in that sort of sense. And the New Zealand dollar setup that I just showed you is a prime example of, you know, you're taking a win, you're taking a loss, you're taking a win, you may be taking a potential loss, and you're kind of going 2 steps forward, 1 step back, 2 steps forward, 1 step back. And then every once in a while, you get that big trade that sends you 10 steps forward, and then you go back to your regular routine, 2 steps forward, 1 step back, 2 steps forward, 1 step back. And we had a really good conversation to start off the week, both in our live trading room and in our syndicate program, about what I think the markets are really like, or rather I should say what I think trading is really like. And you know, the analogy that I made is trading is like a boxing match, and imagine yourself stepping in to the ring with the biggest, baddest boxer out there. Let's just say Mike Tyson in his prime, right? The scariest thing on earth. And that is the market, right? The market is bigger than us. The market is faster than us. The market is more experienced than us. The market is stronger than us. We are really the underdog in this opponent, in this matchup, I should say. And as traders, especially retail traders, we have to go in with the right mindset. And the right mindset isn't to go in and really go for the haymaker punch and try to knock the market out. I think that's what too many newer traders try to do. They go for those home runs. They go for those big hits. And, well, what ends up happening is they get knocked on their tail because of that. Unfortunately, I had a conversation with a trader earlier this week where he said that, hey, Akil, I made one trading mistake, and because of that, I lost 50% of my account. 50% of this trader's account because of one mistake. And again, that's going for that home run trade, missing, right? And then getting punched in the face. In reality, we want to approach the market, or approach Mike Tyson, you know, sticking with the boxing analogy, in a really strategic approach, right? We know that we may not have the knockout power. We're not going to win by knocking the market out. We're not going to beat the market. So our game plan needs to be, we're going to score as many points as possible. So we come into the ring, we jab, try to get a point, defend. Jab, try to get a point, defend. And we try to score small points, right? That's the 2 steps forward, 1 step back is the block. 2 step forward is the punch, 1 step backwards is the block. And we try to score little wins here, little wins there, right? And then every once in a while, right, the market will leave its guard down. So our opponent will drop his arms. And during that opening, that's where we need to take advantage and really go for that big power punch. And that's what you've seen on the pound dollar a couple of days ago. That's what you've seen on the euro dollar 2 weeks ago, the pound yen that we're going to look at in a little bit, dollar Canada, right? but you have to time it correctly, because if you don't, if you go for that type of punch prematurely, right, you may miss. When you miss, you're exposed. When you're exposed, boom, market hits you in the face. I know a few of you guys are probably asking about the arm here. A couple weeks ago, I had a really bad bike accident and really skinned up the whole left side of my body. So that's, I don't have any type of skin disease or anything like that. It's just, I'm recovering from the accident. That's it. But again, trading really is a battle, and we have to be smart about how we approach it, because all it takes, right? All it takes is getting hit once to lose 50% of your account. And for some of you guys, you may know traders, or, and I hope it's not you personally, but you may know people that, hey, they made one big mistake and they blew their entire account. And the thing is, you blow your entire account, if you have no money to trade, guess what? You're out the game. The match is over. Even if you're getting hit in the face a little bit by the market, right? If you're smart and you can withstand those blows, you still have a fighter's chance. And as long as you have a fighter's chance, you have a chance to win. So always remember that, right? 2 steps forward, 1 step back. Our job isn't to go for the big haymakers. It's to go for the jab, score, defend, and then every now and then, when the market sets it up just right, go for that haymaker. And I'll show you a trade that we looked at really for the last month that actually put in that type of move. So we're here on the pound yen 4-hour chart. If you've been a frequent viewer of the Forex market preview here, or if you've been in the syndicate, you should remember that this is a pair that was very, very, very heavily on our radar from really about a month or so ago. We were looking at this trade. We caught some beautiful moves to the downside. We were looking at this trade for a long opportunity while we were down here at the right shoulder at this 140-150 level. And you can see that we've essentially made a 900 pip rally off of that zone. We had an inverted head and shoulders down here on the lower time frame, and we had a little bit of confluence on the higher time frame with this ascending triangle. So I'll show you that's looking like this. Boom. And we've broke above that and we've rallied up. Now, I want to talk about this pair because it looks as if this is a no-brainer trend continuation opportunity. And I actually got a tweet about someone asking that. And I have a difference of opinion. I'm not too bullish on this move anymore. And the reason is, if we take a look at the weekly, it'll give us a better look. We're hitting the bottom of previous structure support right here. So you can see price action has rallied down. We formed a level of support right here. We broke and closed below it. We tried to rally back up there and got rejected. So I'm not saying that price action can't continue higher, but this level right here, especially the wick of this candle, this gives me enough concern not to be interested. And that's the thing about trading, is we don't have to trade every single thing that looks like it could be maybe a potential opportunity. No, we want to trade the best opportunities, in my opinion. And this just doesn't do it for me. In fact, if anything, I would look for a little bit of relief at this level come the opening of the week. Let's just go down to a lower time frame. Let's go down to a 1-hour chart. And well, the little Friday kind of tail off here. This is going to be an interesting level to watch as we start up the week, because we can have one of two things, right? This can form into a bullish pennant pattern, which is a consolidation pattern and an expected break above, close above, and a continuation up. That would give a trend continuation trader an opportunity. Or we could see a little bit of relief, and this can turn into a 2618 opportunity. So we can see something like this. We can see a retracement like we already have. We have a double top here. If we start trading below this level, right? Break below, close below. We trade below this level. We can look for a retest of structure and a chance to trade it down all the way to our level right here, which is going to be 148.70s. And even a little bit lower, about 148.30. So this is going to be an interesting pair to watch on the open. Really depending on how price action reacts and how price action moves, it can give us one or two options here, a bearish option and a bullish option. And if you're brand new to this channel and you're not familiar with the 2618 opportunity, real quick, just head over to our website, tradeempowered.com. It should be right here on the homepage. Yep, here we go. 2618 strategy. Just click the button. It'll take you right to the free training. I think it's about 2 hours. So make sure you clear 2 hours of your weekend to do it. And it teaches you a very simple trading technique that you can use to start getting involved in the market. And of course, while we're here, if you're looking to get more involved, we have a handful of supporting services here. We have our full training courses in this tab right here. We also have live training rooms and of course our syndicate program. The syndicate program is the cheapest and easiest way to get involved. And if you're someone that wants to be involved with us in the market, you want to see our best trading opportunities daily, I certainly recommend checking it out. It's $1 for your 30-day trial. So you've got 30 days to really see if you like it or not. And I'll tell you what, after that, here's what I would recommend doing. We'll get the pound dollar in a little bit. I recommend, right, doing this right here. If you go down to select your membership plan, if you sign up for the yearly membership, right, you're saving 50%, right? 50% of if you were just to go month by month. So I certainly recommend doing that. $600 a year, that you're looking at $1.60 a day. That's less than what you're spending on a cup of coffee or a pack of cigarettes throughout the week. So put your priorities in place. I love coffee as much as the next person, but I'd rather learn a skill that can potentially and hopefully eventually earn me enough money so I can buy maybe a coffee company later on instead of just a cup. But let's go to pound dollar and end things out. We're getting a little bit long here. Pound dollar is very similar to the pound yen. You can see we're starting to consolidate right here. I still am holding my position here. We're up about 400 pips right now, or what, about up a little under 400 pips. We retraced a little bit. No, right about 400 pips, yeah. 131.87, we're at 135.83. So about 400 pips right now. Really the same type of formation as the pound yen. We don't have that double top, so we're not gonna be on 26.18 alert, but we are going to be on alert for this flag pattern, and a potential break above would be love for me, because right now my stops are trailing below this level, which is a good amount away. Nothing I can do about it, I'm sorry. But a break above, close above would allow me to actively manage this trade and move my trail stops up below this level of consolidation. But what really makes this trade different than the pound yen is that if we go up to that higher time frame, and this is why we do that top-down analysis. Let's just go to let's go to the weekly again. If we go to our higher time frame and look at the perspective, right, where pound yen was stuck at structure, right, we're stuck at previous structure, support, term, resistance. Pound dollar has just put in a higher high, higher close above this very important weekly level. This was kind of the Brexit consolidation. We had our Brexit here, and the market did nothing for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, what? 3 months here, 4 months here. And we've broken and closed above that level for the week, which is something that I wanted to see as far as a confirmation of that bullish move. So I do think we can go higher here. Our next stopping point is going to be up here at about, let's just call it 138 flat. So there's still opportunity. And of course, in the syndicate, our orders are off. So we'll be looking for more opportunities to get involved throughout the week. So thank you guys for joining me. As always, I know I get a little long-winded sometimes, but you guys seem to love it. I appreciate the support as always. I hope to see you guys this week. Each week we do this video, we get more and more members that check out the live trading room, and they then question themselves about why haven't I done this earlier? But hey, we have to do it when the time is right. That's what I always say. If you're not ready to commit, if you're not ready to be 100% focused, really, if you haven't taken enough pain in your trading where it's to the point where you have no choice but to succeed, then you're probably not ready yet, and you're probably going to waste the opportunity. So, the time is different for everyone, but I look forward to seeing you guys in there. I look forward to seeing you guys in the syndicate. Remember, sign up for that year and save yourself 50%. And I look forward to another good month of trading, another good week of trading. This has been one of my best weeks of the year, if not my best weeks of the year, capturing really about 500 pips from the market. So I don't expect that to continue, but I've given myself a good enough cushion where I can absorb any type of losses that I take on next. But hopefully the winning continues. Anyway, take care, have a good weekend, and I'll see you guys next week. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.